Phil, you just heard Seema talking about places to find value in industrials. Is it an attractive sector for you right now?
It is. You look at the sectors that are working and the consumer and technology, the areas that have been doing fine. Industrials have been sort of struggling in terms of some of the macro issues. The ongoing China-U.S. trade situation, the General Motors strike that just got settled last month, and then the ongoing stuff with Boeing. I think we're coming to a resolution on those issues over coming months with some hope. And I think investors, as a forward-looking discounting mechanism, are looking through into 2020. What are the prospects for industrials if we can get those issues behind us? As a result, we're seeing those stocks enjoy a nice rally here over the last couple of months. And as a result, we've been right there with them with a buy on industrials.
What's the favorite part of the market for you right now? Is it a sector focus and a specific industry within a sector? Is it a market caps part of the spectrum? What do you like right now? So
we've had this 3,100 call on the S&P 500 over the last year, and that's worked. So the stock market's been up about 32% or so from the bottom of the market at Christmas Eve to where we are now. The two areas that have sort of underperformed, the value versus growth proposition, there's still some more room in value. Growth has outperformed dramatically over the last couple of years, and small cap versus large cap. There's a lag there that I think is going to be closed over the course of the next couple of quarters.
All right, so you mentioned the U.S.-China trade talks. If there is, the markets have been trading on every headline. Let's assume that there is maybe a resolution that happens, at least with the Phase 1 agreement. Right. If not this month, maybe early next year, something along those lines. Hypothetically, if that were to happen, is it a sell the news type scenario with the market?
I don't think so, because as we look out over the next 12 months, our forecast for year-end 2020 is 3,500 on the S&P 500. So you've still got another 10 or 15% to go. December 15th is the key date on China-U.S. Both of these countries desperately need the deal. And December 15th is the next date at which the tariffs were going to ratchet higher. We need to find a way to sort of calm the rhetoric and get that skinny Phase 1 deal in place before December 15th and allow the market to begin to price in some of the potential positives of the U.S. beginning to export an extra $200 billion worth of stuff to the Chinese over the course of a calendar year.
All right, just a couple seconds left here. What's the place in the market you would stay away from right now?
I think treasuries, if the economy does better over the course of next year as we expect, treasury yields should continue to rise. So I think you've got to be invested in the equity market and stay underweight in the treasury market.